Remember back when it felt like all anyone could talk about was inflation? Like every time you went to the grocery store, you wondered if this was going to be the trip that broke the bank.
Yeah, or if gas prices were ever going to come down from those crazy highs.
Exactly. And trying to rent an apartment. Forget about it.
It felt like every other day there was a new headline about inflation.
It really did. But I feel like we haven't heard quite as much about it lately.
That's true. It's definitely calmed down a bit since those peak months.
And the good news is we're actually seeing some positive movement. According to AP News, September's inflation rate hit a 3-year low, down to 2.4%.
Wow, a 3-year low. That is good news. It's the lowest it's been since February 2021.
Right. It feels like forever ago. And there are a few bright spots in the data.
Like what? Tell me more.
Well, for one, gas prices have finally given us a bit of a break at the pump.
Thank goodness for small favors.
Right. And it seems like those rent increases that were hitting everyone so hard might be easing up a bit too.
Yeah, that's huge for so many people. Rent is a major expense for a lot of folks.
Absolutely. But, it's not all sunshine and rainbows.
It never is it? There's always something.
So true. What's the but here? What are we missing?
Well, it's important to remember that core inflation is still pretty high.
Core inflation? That's the one where they strip out food and energy prices, right?
Exactly. It's meant to give a clearer picture of those everyday expenses, the stuff that we're buying all the time. And unfortunately, it came in at 3.3%, which is still higher than the Fed, those economic referees trying to keep things fair, would like to see.
So even though we're seeing some relief on things like gas and hopefully rent, those everyday core costs are still stubbornly high.
That's right.
Okay, so how does this impact the average person, someone who maybe doesn't follow economic reports that closely?
Well, the truth is inflation impacts everyone, whether we realize it or not.
Also.
Well, think about it. The rising cost of medical care, clothes, even plane tickets, it all adds up. And it makes it harder to plan for the future, whether you're saving for a down payment on a house or trying to figure out how to afford retirement.
Okay, so those core costs are still high, and that's a problem. Does that mean the Fed's going to keep raising interest rates? Because if I remember correctly, that's their go-to move to combat inflation.
You'd think so, right?
Yeah.
But this is where things get interesting, because with this latest data, the good news and the not so good news, some economists believe the Fed might actually lower interest rates in the coming months.
Now that's a plot twist. Lowering rates now seems a little counterintuitive, doesn't it? It feels like they'd be sending mixed signals.
It does, and honestly, that's why the situation has economists so intrigued.
I can imagine. So what are the potential ramifications of this? Like, why lower rates now?
Well, on the one hand, lower interest rates could potentially stimulate the economy, maybe even help us dodge that recession everyone's been worried about.
Right. It seems like every time I turn on the news, someone's mentioning the R word.
Exactly. But on the other hand, and there's always another hand in economics, right?
It seems like it.
Lowering rates could also end up fanning the flames of inflation, especially if those core costs we talked about don't start trending downward.
So it's a real dilemma for the Fed. It's like they're walking a tightrope trying to find that perfect balance.
Exactly. And to make that tightrope walk even trickier, there's another major factor influencing their decisions.
And what's that?
The escalating situation in the Middle East.
Okay, so we're transitioning from economic pressures to a different kind of pressure in the Middle East.
Talk about a cliffhanger.
A cliffhanger indeed. So let's talk about what's happening in the Middle East. Because while things are a little calmer here in the U.S., at least on the inflation front for now, the situation over there is anything but calm. And it could end up having some major ripple effects, even impacting things here at home.
Absolutely. And it's not just about, international relations and things like that. This could actually hit us right here in our wallets.
Seriously?
Yeah, we're talking about the potential for this conflict to impact energy markets. And we all know how much energy prices affect, everything.
Right. Like, that's a big deal for inflation too, right? Didn't we see that happen like back in the 70s with the oil crisis?
Exactly. And that's another layer to that whole tightrope walk the Fed is doing with interest rates. This situation in the Middle East is definitely a major factor they're having to consider as they make their decisions.
Right, because higher energy prices could make inflation even worse, even if other prices stabilize.
Exactly. It's all connected.
Okay, so before we go any further, can you give me a quick rundown of what's actually happening in the Middle East? I know it's about more than just the Israel-Hamas war now, right?
Yeah, unfortunately, it's escalated quite a bit. We're seeing Hezbollah in Lebanon and Houthi militants in Yemen getting involved, so it's really spread beyond that initial conflict.
Okay, so it's becoming a much bigger deal than just one conflict. But for someone like me who's not a geopolitical expert, why does this matter so much? Like, why should the average person be paying attention to this? It seems very far away.
Well, remember how we talked about the Strait of Hormuz earlier?
Vaguely. Refresh my memory.
Right, so it's this narrow waterway, almost like a bottleneck, that connects the Persian Gulf to the open ocean. And it just so happens that about 20% of the world's oil supply travels through that one little strait.
Wait, seriously, 20%? That's like all the oil tankers you see in pictures and documentaries, right? A huge portion of those go through there.
Pretty much. And many of them are headed to countries all over the world, Europe, Asia. It's a major artery for global trade.
So if things get even more intense in the region, and let's say, Iran decides to retaliate for Israeli attacks, they could essentially shut down a huge chunk of the world's oil supply.
It's a real concern. And it's something that's making a lot of people in the energy markets pretty nervous. Like that CNBC article you shared, they were highlighting how some analysts are worried that the risk of a major disruption to the oil supply is being underestimated.
So it's kind of like everyone's holding their breath, waiting to see what happens. Because if something happens, there's a real chance that oil prices could skyrocket.
Exactly. And that would have a ripple effect on, well, everything.
But it's not like the entire global oil supply depends on Iran, right? I mean, there are other oil-producing countries, right?
You're right. Iran isn't the only player in the game. We also have OPEC plus A, which controls a big chunk of global oil production.
OPEC. Okay, that rings a bell. Remind me again what that is.
Right. So it's basically a cartel of oil-producing countries, kind of like a big players club, and they collectively decide how much oil to produce and sell on the global market.
So they could potentially step in to offset any disruptions from Iran, like increase their own production to make up for any potential losses?
That's what some people are hoping. But there are no guarantees.
So even with OPEC Plus as a potential backup, there's still a ton of uncertainty. And as we were just saying, uncertainty in the oil market usually means one thing: higher prices.
Unfortunately, that's often the case.
Higher prices, right. And not just for gas either. This is where it feels like things could get really messy for everyone, not just those who are closely following the ins and outs of this conflict.
You're absolutely right. Even if we don't see a full-blown crisis in the Strait of Hormuz, just the uncertainty alone can send ripples through the entire global economy.
Okay, so connect the dots for me. How does uncertainty in the Middle East translate to, say, my grocery bill going up here in the U.S.?
Well, think about it this way. When all those traders and investors, the people who are buying and selling oil every day, when they see trouble brewing in a region that's so important for oil production, they get nervous.
Makes sense.
And when they get nervous, prices tend to go up. It's just basic supply and demand, right?
Right. If everyone's worried about being able to get the oil they need, the price is going to go up.
Exactly. But here's where it really hits home for everyday folks like you and me. Oil isn't just about filling up your gas tank.
Like, it's in everything.
It is. It's used in so many products and processes. It's kind of mind-boggling. Think about transportation costs, for example. The cost of shipping things, food, clothes, you name it, is a huge factor in how much we end up paying for those things at the store.
Oh, right. So increased shipping costs just get passed down to us, the consumers.
You got it. And then there's the whole manufacturing side of things. So many products that we use every day, they rely on petroleum in some form, either as a raw material or as an energy source for production.
Wow, I hadn't really thought about it that way. It's like a chain reaction.
It really is. Higher oil prices have this ripple effect throughout the entire system, impacting everything from the price of that cup of coffee you were talking about to the price of that new phone you've been wanting.
It makes that whole core inflation issue we talked about earlier even more complicated, doesn't it?
Absolutely. It really keeps those policymakers at the Fed up at night, I'm sure.
I bet. So what are their options at this point?
Well, they're in a tough spot. On the one hand, they could lower interest rates.
Which seems counterintuitive, like we talked about earlier.
Right. But the thinking is that it could help to boost the economy and maybe even keep those core costs from spiraling out of control.
Okay, so there's a potential benefit there.
There is. But the risk is that if energy prices really start to take off because of what's happening in the Middle East, lowering interest rates could actually make inflation even worse.
So it's like they're trying to predict the future, but with all these other factors influencing things, it's nearly impossible.
It's definitely a balancing act. And this is a perfect example of just how interconnected our world really is. Events happening thousands of miles away can have a real impact on our lives, even in ways we might not expect.
That's for sure. Well, this has been a fascinating deep dive. We've covered so much ground: U.S. inflation, the situation in the Middle East, the Fed's tricky balancing act, and how it all ties together. It really makes you think.
It does, and that's what we hope to do here.
Exactly. A huge thank you for explaining all of this in a way that even I could understand.
It was my pleasure.
And to all of you listening, thank you for joining us on this deep dive. We hope you learned something new and interesting. Until next time.